Hi, Tim Bigham back again after a brief break here, and really haven't missed much over the past several weeks. We have really the S&Ps, Dow, most of the major indices back to levels they were a couple weeks ago, post QE to infinity announcement and non-farm payrolls numbers. So we did see an attempt at a breakout on the equity market. We saw the VIX briefly trading with a 13 handle. Now since then we've seen a retracement of about 66% of that move up, so I expect us to kind of hang around here and grind sideways from now pretty much till the election. Certainly the debates provided a little more anti-Obama fuel, which should provide more uncertainty for the markets, which I think just means sideways with some chop back and forth. So until further notice, I think we'll be sideways, waiting to break out to the upside. Plenty of room to the downside. 1420 is kind of the first support level on the S&P to keep an eye on. The VIX again back above 15, so back to kind of a agnostic sort of level. Don't look for any kind of major moves there. Certainly with earnings season kicking off, Alcoa today after the close. And taking a look at Alcoa, which used to be the kind of bellwether for not only earnings season, but also the economy generally, certainly on the metals front. But Alcoa's been kind of stuck in the mud, to say the least, over the past several quarters. Although this week we do have a nice option skew. The front month weekly options trading about a 65 implied volatility. The monthly options for October, which expire next week, trading about a 35 implied vol. So I'm structuring a very cheap trade, buying those October 9 monthly puts, selling the October 9 weekly puts, paying just a nickel, and looking really for nothing much to happen. Slightly bearish trade Alcoa last I look about 920, so if it does drop a little, great. If not, looking to maybe capture 7-8 cents on this trade. Doesn't seem like much, but when you pay a nickel, you're looking at more than a doubler here. It's a cheap way, in my opinion, to kind of take a speculative position in Alcoa without having too much downside, to say the least. So really, until further notice, I think that grind will continue. Earnings looking to be probably the first time we have a slight earnings recession, looking for about a 1 to 2% drop in earnings over this quarter, the first time since 2009. So the latest rally we've had has been free money based, more of a multiple expansion rather than earnings driven. I think to get this market appreciably higher, we're going to have to see some solid earnings, and I think it may take at least a couple quarters to kind of move through there, especially with the input costs on a lot of these stocks going higher, margins at all-time highs. So not a lot left to squeeze out for companies to kind of manufacture earnings. I just think we're stuck here for a long time, buffered by no longer cheap valuations to the upside, and that QE buffering the downside, taking away perhaps some of the big tail risk, although a 3 to 5% pullback at any time can be expected. So until next week, as always, position size accordingly and keep your stops in place. Thanks.